This is investment banking market developments from January 31st to February 6th, 2013.
This is Josue Carias with an overview on economic conditions and a summary of global news. This week saw a continued rise in stock prices with decline on Monday and a rally on Tuesday to bring the Dow Jones Industrial back to around 14,000 and the S&P closing slightly over 1,500. BlackBerry, the company formerly known as Research in Motion, saw its stock go up by about 15% on its first trading day under the new name, the increase in price being largely due to higher than anticipated sales of its new BlackBerry 10 phone. Zynga, the Facebook gaming platform, beat out market expectations as they released their fourth quarter earnings this Tuesday, earning 1 cent per share or $6.9 million on sales of $311 million last quarter. Analysts, polled by Thomson Reuters, expected a loss of 3 cents per share and $212 million in revenue. In world news, the yen resumed a decline due to market expectations for the appointment of a new Bank of Japan governor. Currently, Japan is going through a territorial dispute with China that is quite tense and could lead to market troubles. Japan claims China's Navy has locked weapons-guiding radar onto Japanese naval forces twice in the past 3 weeks, increasing a risky heightening of the two countries' long-running territorial dispute in the East China Sea. In Europe, political uproar caused by corruption scandals in both Spain and Italy is causing nervous sentiments in the market for bonds, leading to higher bond yields in both nations and causing growing concern over the stability of Europe. Meanwhile, Iran faces obstacles in selling its oil due to the U.S. tightening sanctions this week to keep importers from paying for the oil with dollars and euros. Under penalty of expulsion from the U.S. banking system, Iran's customers will be restricted to using their own currencies for their own purchases starting today. Importers will be compelled to keep the payments in escrow accounts that Iran can use only for locally sourced goods and services. And that's it for economic conditions and global news.
This is Thomas Funk. I was speaking about investment banking news and equity and debt financing activity. Recent news in the investment banking world includes Barclays setting aside £1 billion to be used as reparations in connection with the LIBOR scandal. £600 million has been added to its previous £2 billion payment protection insurance. The remaining £400 million was added for mis-selling interest rate swaps to small businesses. This is another in a long line of fines for Barclays, the last being in June for £290 million. In connection to that, Barclays Finance Director Chris Lucas on Sunday announced his intention to retire in the near future. The bank claims that his departure is in no way related to current investigations. UBS was also prevalent in the news when it announced fourth quarter losses of 1.9 million francs, bringing the fiscal year total to a loss of 2.5 billion francs. This is a stark contrast to 2011's 4.1 billion franc profit. Much of the loss has been attributed to lawsuits, scandals, and restructuring, yet CEO Sergio Ermati insists that the bank has, quote, made decisive progress in executing their strategy last year and started 2013 in a strong position. In conjunction with that, UBS has also announced it intends to buy back around 5 million francs of its own bonds to trim finance costs. On January 31st, Oil India Limited, Air China, and Chesapeake Lodging Trust announced their plans of issuing additional stock in the near future. Oil India will be issuing over 585 million shares, Air China will be issuing around 168 million shares, and Chesapeake Lodging Trust will be issuing over 150 million shares. On February 4th, NXP Semiconductors and Enterprise Products Partners announced that they would be issuing an additional 910 million shares and 436 million shares respectively. IT giant IBM announced that they will issue 1 million 5-year bonds. The bonds have a face value of $1,000 and will be sold at $99.54. The Federal National Mortgage Association, or Fannie Mae, and Federal Home Loan Bank also announced intent to issue debt. Fannie Mae will issue 50,000 15-year bonds with a face value of $1,000. Federal Home Bank will issue 15,000 3.5-year notes with a face value of $5,000. Both securities will be sold at face value.
This is Rob Lowe here with recent updates on the mergers and acquisitions market. Since the announcement first made in June, Anheuser-Busch InBev continues to salvage its $20 billion acquisition of Grupo Modelo SAB of Mexico. The key driver for such an acquisition being to gain a clear path to the beer market in Mexico, a huge opportunity. In a move that surprised both the company and many of its followers, the U.S. government sued Thursday to block the merger on grounds that the deal would substantially lessen competition in the market for beer. In other news, Geely buys maker of London cabs. Zhejiang Geely Holding Group said on Friday it has acquired the principal assets of Manganese Bronze Holdings, owner of the London taxi company. The price of the acquisition totaled £11.04 million, the equivalent of $17.5 million. The move reflects the international ambitions of China's automakers while underscoring the difficulty of keeping a niche product, such as the black cab, afloat as manufacturing in Britain becomes more expensive. An update concerning the previously announced leverage buyout of Dell, Michael Dell is close to finishing a risky $23 billion deal to take private the computer company he founded nearly 30 years ago, in an effort to remake Dell for the post-PC era. Late Monday, Mr. Dell was in talks with Microsoft and private equity firm Silver Lake Partners to offer shareholders between $13.50 and $13.75 a share, as reported by the Wall Street Journal, about a 25% premium to Dell's stock price in January before the possibility of a deal became public.
This is Jared Taylor, and I'm going over hedge funds. This week in the hedge fund world, Edmund Offerman, that works for Renaissance Technologies LLC, invested 15 million Swiss francs in 2010 to revive Saas Fei's struggling ski lift company. Offerman's focus on profit and lower costs is upsetting local residents. The reason they are upset is the fact that fewer locals are in the management positions and have seats on the board. In other news, Bridgewater Associates has announced it will launch a new hedge fund this year. The new fund will be the All-Weather Major Markets. All-Weather returned 15.3% in 2012. Hedge funds and other money managers raised long positions across 18 U.S. futures and options by 5.6%. This was the highest since December 11. O'Day Asset Management and Egerton Capital are upping their bets against Monte dei Paschi di Siena after the troubled Italian bank faces heavy losses. Hedge funds are currently cutting down on their negative bets on stocks. This is due to rising markets. Nicolas Rousselet, head of hedge funds and managing director at Unigestion, said, "You buy the undervalued companies on which investors underestimate the earnings potential in sectors that have been avoided by the market, and on the other side of that position, you identify the darlings of the market, the excessively expensive stocks among which you can find good short opportunities."
According to the Wall Street Journal, the United States Justice Department is expecting to sue Standard & Poor's Rating Services, quote, as soon as today, alleging the firm ignored its own standards to rate mortgage bonds that imploded in the financial crisis and cost investors billions, end quote. The Financial Crisis Inquiry Commission, which investigates the causes of the crisis, determined 2 years ago that the highly regarded credit ratings firms were, quote, key enablers of the financial meltdown, end quote. This upcoming lawsuit is the culmination of a government investigation extending back to 2010, according to former S&P analysts. The civil charges against Standard & Poor's will be filed by U.S. Attorney General Eric Holder. This action is significant as it represents the first act of enforcement against a credit rating firm over the meltdown. The government is seeking to impose penalties in excess of $1 billion, which S&P officials vigorously protest, asserting that they are being punished by the government for, quote, failing to predict the housing meltdown or financial crisis, end quote. S&P also contends that its ratings are opinions, which are under the protection of the First Amendment. In response to the first inklings of the lawsuit, Standard & Poor's parent company, McGraw-Hill, saw a 14% drop in its stock price in yesterday's composite trading. S&P officials are concerned that negative publicity from the case and the hefty government-imposed fines could, quote, sink the company, end quote. In other recent news, the United States has big plans to expand its lockdown of offshore tax evasion. The Internal Revenue Service is preparing numerous criminal cases against suspect parties, according to defense lawyers involved in the cases. The main subject in question is Swiss banking giant UBS, which was required to hand over names of U.S. account holders 4 years ago. defense attorneys estimate that the federal prosecutors are now conducting at least 100 criminal investigations related to tax evasion. Attorneys are receiving calls from many people who have received grand jury subpoenas for their foreign account records. 79-year-old widow, Mary Estelle Curran, widely known for her volunteer work, pled guilty to a tax evasion case in which she agreed to pay $22 million and faces up to 6 years in prison. This case prompted Brian Scarlatos to make the following remark, quote, "The government already has won about 50 criminal cases and collected at least $5.5 billion in connection with undeclared offshore accounts. U.S. officials want to send a message that no one is too old or too rich or too poor or too sympathetic to escape criminal prosecution." End quote.
Thanks for listening. You stay classy, Utah State.